Traders from around the world, what's going on? It's your boy Ricky Cadden back again from Real Life Trading Australia. Hope you guys are having an absolutely phenomenal, profitable week. We are here at Real Life Trading. A lot of lives are getting changed this morning. I'll tell you what stock it was that absolutely changed everyone's life today when they woke up and seen what happened. But before we do, guys, let's talk about the broader markets. Now, the SPY, I did mention back here that we would most likely trade up a little bit higher and possibly retest. A couple of reviews ago, I did mention that a pullback is definitely imminent, and basically if you take a look at the VIX, the volatility index, I did mention this back on this day. So this really nice high wave indecision candle on the VIX was showing that there is going to be possibly a pullback in the broader markets in the next within the next 2 weeks. So back to the SPY, we are slowly starting to pull back. And what's really interesting is a lot of the ETFs, some of you may know that there are ETFs that track the opposite of the broader market. So they do actually trade with the volatility index, and as the volatility index increases, so does UVXY. Now, UVXY is a very nice inverse ETF that does go down overall. However, when there are nice little pullbacks in the market, you can see this is really about timing. If you do time this quite well, you can look at getting 50% gains on your returns. But UVXY right now, you can see we are starting to consolidate. But what's really interesting, guys, is take a look at the volume that is coming in right now. Currently at around 90 million shares being traded. Back when we had COVID, which was all the way back here, right here, you can see that at the highs, at the peak of COVID, we only had about 77 million. So we're actually getting a lot more volatility coming in than what happened during COVID. So there is going to be possibly, I would say probably about an 8 to 10%, or at least 5 to 10% pullback in the markets very, very soon. Very excited about that. Make sure you guys are locking in some gains. But the SPY, guys, is following Mr. Squiggles. I did draw this. This line back here on this day, and we are following this absolutely beautifully. What's really interesting is we are actually getting increasing volume as we're going lower, guys. So just keep that in mind. And if you take a look at the broader markets, the E-minis, really not looking super strong. Volume very, very high. We're still going lower, and it just makes me believe that we'll possibly have a little bit more of a pullback. So the E-minis, get ready for a breakdown. It's possibly going to come, in the next week or so, possibly the start of March or end of Feb. So keep that in mind. Here is Apple. Now, Apple, I mean, this was just Mr. Squiggles just pulling this one out of nowhere. No, he's very, very good. You can see we did follow this line almost perfectly. This is a dip buying opportunity. I know we've got the 100 simple moving average. Sensational volume. Obviously, if we do have a little bit more of a pullback in the markets, I mean, we could see this pullback possibly even down to the 200 simple, at which point that would be a phenomenal buying event for Apple. Because right now we have pulled back from the previous highs about 10%. If we come all the way back down to the 200, guys, that's 23% pullback. I mean, this is just absolutely incredible. Back during COVID, we did have a pullback. Usually it doesn't pull back more than 30% on Apple, and then it generally bounces. So anything you're looking at loading the boat on, quote unquote, you want to be looking at some very nice long-term buying locations, and maybe looking to play this with longer-term leaps. But Apple pulling back just a little bit. I love the volume that's coming in. We may have a nice little short-term bounce, but then we could possibly roll down if the markets do continue lower. Now, the trade that everybody woke up to today, here it is, WIX. Now, WIX, we got into what is called a synthetic long. Now, I have my very own strategy, which is actually called, technically it's a synthetic long, but it's actually a diagonal synthetic long split strike. Bit of a tongue twister, but WIX, this is the trade that we got into. I'll show you back here with the ideas we had. Back here in November, I did mention this particular trade. If you are looking to do this combo order, it's a $14 credit. Guys, it's a $14 credit, meaning the trade costs you $0 up front. You actually get paid $1,400 per contract, which is a net percent return of 7% ROI from day one with an unlimited upside potential profit. Now this diagonal synthetic long stock split strike position, I did mention to a lot of my traders that 350 is going to be my my target if I'm going to close. Can't pick the absolute top. I know that this will most likely probably go to about say 400 and some change, but then it will most likely look to roll back down. But very well done to a lot of the traders. I just want to share with you some of the results that we got here today. Everyone waking up this morning, 5 a.m. We got Ann telling me, take a look at WIX. I did mention 350, was watching close. Bernie closing out with 74.25%. Oh, I mean, that is just absolutely insane. Ryan closing out with 20 Rs. I mean, this is just absolutely incredible. Closed out on WIX. Shaney, well done, Shaney. I mean, well done, everybody. I'm so pumped for absolutely everyone that took this particular trade. But guys, if you do want to get a part of these particular trades and learn exactly what we do, just hop on over to www.reallifetrading.com.au and make sure you look to join the room. This particular trade at minimum would have made you roughly about 6,000 US dollars, which is close to about 8,000 Australian dollars. And as you can see here, guys, we are only $159 per month. This is where you want to be looking at. This price here, $24.95. This is where you're going to make all the money back. This is where you do get coaching with me as well, and I do teach you these particular strategies, how to do this. I mean, this trade costs $0, and some people out there were making upwards of $20,000 on this particular trade. So well done to everyone who took this trade, and thank you if you are a real life trader. Thank you for following and supporting us through this absolutely phenomenal journey, and thank you for helping us enrich your life. Hope you guys are happy with this particular trade. WIX right now, absolutely incredible. It is a very bullish stock. Look to buy the dips on WIX. We use it personally for our websites, but nonetheless, great company overall. Next on the list is the ASX 200. Now, the ASX 200, I did mention, will possibly pull back based on this bearish engulfing candle, and I do think we'll probably go a little bit lower. Right now, we are pulling back down to a previous level of resistance. If we do not hold this particular level, which the market is closed right now, we'll have to wait and see if we get a gap down after tonight's session. But Monday will be very, very interesting, but we could possibly come back down to, back into the low 60s as well. So keep your eyes peeled on a nice little pullback in the markets. BHP, we did have a nice little retest gap action just the other day at the start of the week, and we are currently retesting. Shocking. Back to a resistance level. Makes a lot of sense. I do think that we're going to just consolidate in this particular range for probably for a little while, at least till about April or so. So make sure you are looking at BHP for a dip buying opportunity. Right now, it's still pulling back, so let it pull back. And I mean, great volume, but there's definitely a lot more selling to come on BHP. One you want to keep an eye on is Kogan. Now, ticker symbol KGN. On the weekly chart, guys, I mean, we've been bearish for quite a few weeks. Shorter term moving averages, we are right at the 50 EMA. Now, I do believe that we are going to start to find some support. Now is not the time to get in on Kogan. We do have earnings coming up just around the corner. If we can hold this particular support level right here, then I do think and do believe that we will, most likely trade sideways within a range. This was a phenomenal public participation phase that we did have on Kogan. So nice little accumulation phase right here, and then here's your public participation, followed by your distribution phase. So you will learn about this if you have done our real life trading courses, and right now we are basically at the lows. So keep your eyes peeled on a slight bounce if we do start to pick up a little bit more volume. I would personally wait until after earnings at looking at this trade, but Kogan, very nice to see that we are coming back down to these lows. Crude oil, now I have been mentioning crude oil to a lot of people especially all our futures traders. I know there's a lot of futures traders out there. I did mention that if we did break out of here, our next target is roughly 62. And as you can see here, that was the exact price that we rejected. So if you did look to either short up here, or maybe you look to take your profits up there on crude, however that looked, I do think this is a very healthy pullback. We are currently trading at 59.70, and I just think that we're most likely going to trade within a range for a little while before we start to break out and go higher. Now, here's gold. Gold finally starting to pick up a little bit of strength. We are at a support level. On the weekly chart, we are closed below the 50-day EMA, which is a little bit worrying. But if you take a look at the dollar index, guys, we should be starting to turn and go higher very, very soon. You can see here, based on the longer term moving averages, I've been talking about, creating lower highs and then slowly rolling back down from the dollar index, and this will actually help gold move higher. So as the dollar index goes down, gold generally goes up. And right now we are just, we tried to trade higher with this beautiful inverted head and shoulders pattern. We didn't bounce just yet. And if we kind of break down, I see us coming back down to around 88 on the dollar index, which also will help, last but not least, the Aussie dollar. Now, the Aussie dollar, I did mention that this has to hold support. In my last review, I did say we do have to hold support here. And based on what's going on with the dollar index and gold, the Aussie dollar is just going to start to pick up a little bit of strength here. And then we should see a nice little push up until about 80 cents. Hope you guys really enjoyed this review, sorry. And I'll be back next week on Wednesday with another free real life stock review. If you guys have any tickers that you would like me to review, leave it in the comment section below. And if you are a part of real life trading, thank you for your support. And if you're not, hop on over to real life trading, get subscribed. Let me help you make all your money and enrich your life. Have a great weekend, guys. And until next time, love life, live life, and trade it. You guys rock.